Last week, the dollar Swiss tested the high price from January, found willing sellers about 3 or so pips away from that level and fell to the downside. It bottomed on a Wednesday and recovered on Thursday and Friday, closing the week, sort of near unchanged levels. In trading here today, we saw an early rise to the upside, get above a key swing area, but that move to the upside failed, and we've since rotated back to the downside. I'll go through all the technicals that are driving this currency pair in this video, so let's get started. Here's the high price that we saw on Monday's trade. That was off the tariff news. We gapped higher and then continued to move to the upside, and then continued to rotated back to the downside Monday, Tuesday, Wednesday, bottoming Wednesday within this swing area through here. You can see the number of different times the price either had a higher low within that area. So finding support against that level helped to force the price back to the upside. By Thursday, we were moving back above the 100 and 200-hour moving averages. Well, I guess this is Friday, off the U.S. jobs report, moving higher on the day and closing right around this level right here. If you compare that to a week ago, Friday, which was closing around this level, it was just marginally lower on the week after a pretty wild ride to the upside, to the downside, and back higher. In trading here today, we did see the gap higher in the U.S. dollar that pushed above this swing area. This swing area is defined by these different swing lows and swing highs. Most of these highs right through here forming the ceiling. We gapped above that level on last Monday's trade. Came back down to that level on Monday and Tuesday. Volatility persisted on the breaks below, where we found support buyers against 100, and then fell below the level right through here and broke below the 100-hour moving average, increasing the bearish bias. So the inability to move higher right here gave the sellers the go ahead to push to the downside, and that's what they've done. And now we have this swing area again reinforcing itself as a resistance level. That level comes between 0.9108 and 0.9115. Get above that level, it's more bullish. Stay below, and a rotation back down toward the 200-hour moving average, and 50% retracement of this move to the upside would be targeted. That level comes in at 0.90181, move below that level, and the 100-hour moving average becomes a target. Of course, with these two currency pairs, we have central bankers at odds. The Swiss National Bank is largely more dovish compared to the U.S. Federal Reserve, which is still being more cautious as far as their monetary policy, with growth still fairly strong in the country, or strong in the country, despite all the headwinds from news and expectations of tariffs and all that other stuff that goes along with that. So be aware of that. That tends to give the dollar Swiss a more bullish bias overall. So watch for dips on the top side. Look for breakouts with more momentum in that direction. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.